Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WALKER DUNLOP INC quarterly report. WALKER Dunlop Inc. offers a diverse range of businesses and services to owners and developers of real estate in the United States. The company's key offerings include financing products such as first mortgage, second trust, supplemental, construction, mezzanine, preferred equity, and small balance loans, property sales brokerage services for multifamily properties, commercial real estate, and multifamily property appraisals, multifamily appraisal and valuation services, real estate-related investment banking, and advisory services, including housing market research servicing and asset management of loan portfolios, origination of loans through principal lending, and investing activities, management of third-party capital, invested in tax credit equity funds focused on the LIHTC sector, and other commercial real estate sectors. These services cater to various types of properties, including multifamily, manufactured housing communities, student housing, affordable housing, senior housing, and healthcare facilities. WALKER Dunlop Inc.'s stock price plummets. A year of decline in the past year, WALKER Dunlop Inc. has experienced a significant decline in its stock price, dropping by over 34.48%. The company's stock reached a 52-week high of $118.19 on November 6, 2024, but plummeted to a 52-week low of $64.48 on May 22, 2025. Two key events contributed to this decline: the release of fourth quarter and full year 2024 earnings in February 2025, which showed a pre-market decline despite beating analyst expectations, and the first quarter 2025 financial results in May 2025, which revealed a substantial decrease in profitability due to increased expenses and rising provision for credit losses. The company struggles with loan buyback issues and potential privatization of government-sponsored enterprises, GSEs, also weighed on investor confidence. The stock continued its downward trend after the earnings release, trading down 2.01% in pre-market. These factors likely played a major role in WALKER Dunlop Inc.'s stock reaching its 52-week low later that month. The primary drivers of revenue growth or decline can be identified from the financial summary. On the growth side, origination fees, property sales broker fees, MSR income, net warehouse interest income, and other revenues have increased significantly, contributing to a substantial rise in revenue. These increases range from 18% to 40% over the 3- and 9-month periods. On the decline side, investment management fees and placement fees have decreased by 47% and 7-8%, respectively. Additionally, origination fee rates and agency MSR rates have declined by 3-4% and 18-31%, respectively. These decreases in revenue are partially offset by increases in commission costs, personnel expenses, and other operating expenses. Overall, the growth drivers are largely related to fees and interest income, while the decline drivers are primarily due to a decrease in investment management fees and a reduction in origination fee rates and agency MSR rates. Net income and profit margins experienced mixed changes between Q3 2024 and Q3 2025, as well as YTD 2024 and YTD 2025. On one hand, net income increased from $28,802 to $33,452 in Q3 2025, while YTD 2025 saw a rise from $63,331 to $70,158. However, there were instances where net income decreased by -9.3%, -25%, and -23%, as reported on pages 27, 29, and 54 respectively. Profit margins also showed varying trends. Net income margin for Q3 2025 was 9.9%, a slight increase from the previous year's 9.8%. Conversely, YTD net income margin decreased to 7.9% in 2025 from 8% in 2024. Some sections reported increases in profit margins, including a 16% rise in net income margin on page 42 and a 4% increase in adjusted EBITDA margin for the 3 months on page 45. The mixed results suggest that the company's financial performance is subject to fluctuations across different periods and metrics. The company's financial performance indicates a positive trend in operating cash flow. The net cash provided by operating activities for the 3 months ended September 30, 2025, was $1,234,219, demonstrating a significant increase in income from operations and net income before non-controlling interests. This is further confirmed by the statements on pages 34 and 44, which explicitly state that the company generates positive operating cash flow. The company's debt level has undergone significant changes over the past year. According to various reports, the total debt level has increased from $6.05 billion to an unspecified amount, page 14, with a notable jump of 12% from $4,028,208,000 in 2024 to $4,512,729,000 in 2025, page 49. Additionally, the total financial liabilities as of September 30, 2025, stood at $3,088,277, up from $1,651,346 as of December 31, 2024, page 20. However, there is conflicting information regarding interest expenses. Initially, it was reported that interest expense on corporate debt decreased by 9% for the 9 months ended 2025 compared to 2024, page 2. However, a more recent report indicates that interest expenses have increased significantly from $18,232,000 in 2024 to $53,765,000 in 2025, page 45, contradicting the initial statement. Management's outlook on company strategy. The company's strategy focuses on leveraging its competitive advantages in people, brand, and technology to drive efficiencies and identify refinancing opportunities. Key areas of emphasis include investing in debt, joint ventures, and preferred equity investments in middle-market commercial real estate, while preserving affordability in multifamily properties. Multifamily remains a resilient asset class, with the company expecting investment management fees from disposition activity to recover slowly. Revenue growth is driven by increases in origination fees, MSR income, servicing fees, and other revenues. The company has a strong pipeline of capital for transitional multifamily assets, with over $500 million available through Debt Fund II. Management expects cash flows to be impacted by loan originations, property sales, and loan closings timing. However, they believe their current warehouse loan facilities are adequate to meet loan origination needs. The company's growth is driven by increased transaction activity and business volumes, leading to a 10% increase in average segment headcount. Overall, management is optimistic about the company's outlook, with a focus on driving efficiencies, investing in strategic opportunities, and preserving affordability in multifamily properties. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with totals reaching $66,284 in 2024 and $68,828 in 2025. Additionally, the company has also been actively buying back shares, purchasing a total of 13,026 shares worth $1,040,288. That concludes the financial summary for Walker and DUNLOP INC. Feel free to comment below, and I will be happy to answer them when possible.